Professor Murray Sabrin, Dr. Murray Sabrin, professor of finance at Ramapo College, author of the new book, Why the Federal Reserve Sucks. I said, I don't usually talk like that, Murray. I'm surprised you give a title. You're one of the brightest cats we know. Welcome back to the show, brother.
That's to get your attention.
There you go. Good. I understand. I say some things on the radio just to get the attention. I appreciate it. Tell us about the book. Tell us about the Federal Reserve. I'm confused, but do you really need the Federal Reserve anymore?
No, we don't need the Federal Reserve.
Whoa!
The Federal Reserve was created in 1913. The country boomed during the 19th century without the Federal Reserve. The dollar was defined as a unit weight of gold. Gold is money. Paper is not money. Paper is a money substitute. Checking accounts are money substitutes. The Federal Reserve was created for the bankers because they operate under a very fragile system. It's called fractional reserves, and they do something that we see at the end of It's a Wonderful Life, that great movie.
Yeah.
Where there's a bank run at the end of the movie because the bank doesn't have, savings and loans doesn't have the money that people want to get out of. So
Right.
They borrow short from us and lend long, and that's the trouble with banks throughout the 19th century. Throughout the 19th century, we had banking panics, not because of the free market.
You're a proponent of the gold standard.
Well, that's the original monetary system of the United States. The dollar was defined as 1/20th an ounce of gold in 1792.
Wow, so that's the way to do it. Will we ever get there? Can we do that? Because it was pretty recent we got off the gold standard with Richard Nixon, correct?
1971, August 15th, anniversary is coming up. President Nixon declared the U.S. dollar would no longer be convertible to gold to foreign holders of gold. President Roosevelt took us off the gold standard in 1933, where Americans had to turn in their gold. Basically, what we have, Joe, is monetary socialism. People don't realize.
Whoa! Tell us about that.
Well, it's a government agency. Well, I should say it's an agency created by the government for the bankers, so they have enormous power over the economy. They pump money in, they pump money out, and that gives us these cycles. They give us these bubbles. We're in the third bubble since the 1990s, the everything bubble. And this bubble is going to end badly, just as all bubbles have ended in financial history.
You know what? What do you think between you and I before this election? Before the election, that'll happen. Do you think?
Well, this is something I've been grappling with because it's up to the Federal Reserve. I mean, right now they're caving in to the notion that we have to lower interest rates, so they're pumping more money into the system. That's what gave us the bubble in the first place. So President Trump wants the economy robust for 2020, just as Nixon wanted it for 1972, and we know what happened after that: double-digit inflation in 73 and 74. So you have a tremendous distortion in the economy. Everything's inflated: real estate, antiques, stock prices, bond prices. Everything is not normal, so to speak.
You know what? The stock market had its worst day of the year yesterday, and analysts are blaming the trade war. You are blaming the Federal Reserve.
But it's all connected because as dollars are created in the United States, what do? We buy things that gives us the best value. Those things may be overseas, so we buy a lot of stuff from China. China takes that money and invests it all over the world, and they're basically doing what countries do that have a lot of money. They're investing, buying up assets all over the world. So if we stop inflating, then the bubble will burst. We'll go back to a normal economy, whatever that will look like. But what we have today is reminiscent of the 1920s and 30s, where we had a bubble in the 20s and we had trade wars and currency wars in the 1930s. And we know how both decades ended very badly.
And the tariffs. I mean, I like that the president's kind of smacking China around a little bit. You know, the way they come in with the intellectual property. There's no. It's like the Wild West out there. The way China has dealt with us. Now you got somebody who stands fast, but you don't agree with the tariffs.
No, because commerce to you is the lifeblood of the world economy. If we don't have commerce between people in this country, we have a lower standard of living. If we don't have commerce between people around the world, we have a lower global standard of living. Governments, this is why, as a libertarian, governments mess things up. What's the biggest myth? We're from the government and we're here to help you. And the other myth is this time it's different. It's not different. When you create money like the Fed has been doing, you're going to create tremendous distortions. And that's why I wrote the book, to explain to the American people, let's have a national discussion. Should we have a Federal Reserve? Should we not have a Federal Reserve?
This is Murray's book, Why the Federal Reserve Sucks, and you should run for office. Oh, that's right.
The subtitle is the most important thing.
There it is. It causes inflation, recessions, bubbles, and enriches the 1%.
This is the key. If income inequality boomed in the 1920s, it's boomed now. Why? Because the Federal Reserve inflates assets. Who owns most of the assets? The 1%ers.
Dr. Murray Sabrin. Murray, thank you for listening. Thanks for being here, man. Thanks for all you do for Jersey, buddy. Thank you so much, my friend. Debbie Duhame's out there on the roads on